Hey everyone, in this video we're going to do fundamental analysis on the stocks of HAL and BEL, and we'll try to find out if they're still worth buying right now. So let's get started. So this is HAL, its current market price is 2,768 and its stock PE ratio is 30.6, which is a fair valuation. So going ahead, let's look at its price chart. It has grown steadily over the years, so no problems with that as well. And its P ratio has grown as well. So yeah, that's decent enough for a company that has been growing in profits. So let's go ahead and look at their profits as well. So for the past couple of years, you can see that the profits have grown massively. Before that was a period of ups and downs, but since 2021, it has been growing rapidly. So no red flags as well. If you look at their assets, they have been growing steadily over time. So no problems with that. You can see that the shareholding pattern, 71% is with the promoters, that is the government. So that's fine. And the credit rating that this company, this stock has is AAA, which is the highest level of credit rating that can be given to a company. So it's a good thing. So there are no red flags as such with this company. So we can look at this. So now we're going to look at the rationale behind why this is still stock that is worth buying. So this is a defense PSU company, right? So they will be getting orders, more and more orders going forward as the military budget of India keeps increasing. So here I have the graph of the military expenditure. So you can see it has grown massively over the past couple of years. And also to put that into picture with the numbers as well, if you look at the expenditure in 2018-19, it was around 4 lakh crores. And this year, 2022-23, it was at roughly 5 lakh crores, right? So it has been growing and it will keep growing for a country like India. So in that sense, the stock seems very, very fair. Its valuation is still pretty good. And if you enter at this price point, it still makes sense. So let's go ahead. And now I'm going to talk about BEL, which is another DPSU stock. Let's go ahead and search for this. So this stock basically will form as a second order business to HAL. So they supply all the electronic equipment to the company HAL, and so they have this sort of a symbiotic relationship, So as HAL grows, they'll require more and more electronic equipment, which will be given to BEL. So you can say that whenever HAL grows, BEL will grow with it as well. So it makes sense to get both of them. And now let's go ahead and look at the fundamentals of BEL. So right now it's trading at around 182 rupees and its P ratio is around 40, which is a bit overvalued, but I think you can still enter at this price point. So it has been growing steadily as well. So no problem with that. It has been growing in terms of profits as well. You can look at this. It has been steadily growing, and it has almost reached 3,000 plus net profit this year. So, and again, promoters 50%, and the credit rating is again AAA for this stock as well. So no red flags at all, right? So looking at these stats, the fundamentals are pretty good of both these stocks, and you can also see that they will have a future demand, they will have a future business as India keeps growing and require a stronger defense. So these are the industry leaders, and they will definitely take a good chunk of the market share in the defense sector. So that is why it makes sense to buy both these stocks, BEL and HAL. So that's it for this video. I hope you guys enjoyed this video. It was the first video that I've made, and I'll be bringing more stock analysis videos in the future. Thank you for watching.